For the last year, we've been talking to our clients, hundreds of clients, thousands of our customers, and then just too many fintechs to name out there. And what we did is we compiled everything that we saw, and we said, what's going on in the industry? And what we found was, below this placid surface that we see today in payments, there's a lot of very turbulent trends that people aren't talking about that are about to rewrite the payment industry. And what we're going to do is we want to walk you through that today. So let's jump right in and dive in here. Let's start with the future, Gen Z, and how this group is going to redefine what we see and what we think of as payments today. So this is a generation that, as you know, is mobile first. They'll trade pretty much anything for mobile payments. They'll trade their friends, they'll trade their money. For this group, privacy is completely optional, right? They'll give up anything as long as you give them something in return. Yeah. And they're also infinitely more mobile, right? They're 4 times more likely to be using the banking app than their parents' generation. And no surprise here. And just moving on here. This was the one that's surprising, is that this is a generation that shares everything. When we put this question up, simply, would you share your payments with somebody else? Everybody in our group that was over 30 said, are you kidding me? There's no way I would share my payment information. But you can see the stats on here. They're 11 times more likely than the baby boomers to share their payment information with other people. The challenge is for us and everyone in this room is it's the generation on the left is trying to build a payment system for the generation on the right? And think about it. Name one major bank today that has a share this on the mobile payments. Try bringing that to your compliance department. If you think you know this generation, think again. Yeah, and moving forward, the other thing about this is I think everyone's thought that this was going to be the debit generation, right? This would be the generation that finally moved beyond credit and moved to debit. Think again. Our survey results said just the opposite. Half of this generation would easily trade anything for more rewards on their card. They have no brand loyalty right now. They're willing to be shaped, and they will be shaped simply by the value that you give them. That's the single most important thing for them. So this is a group that you're going to see more and more of, and they are truly upping the ante for us in the industry right now. Our next trend here is around user experience, and there's a new gold rush out there, and it's to own the user experience in the industry. So if you think about it, as marketers in this industry, we've spent pretty much our entire lives worried about card art, the color, the pearlescence, could we build biodegradable seaweed plastic for Greenpeace cards? Yeah, yes, I did that. Very hard to run through embossing machines. But that's all changing. It's a different sense of ownership now. And what's happened is it's the precious moments that matter right before things occur. If you think about Google, Google doesn't make a fortune from search. Google makes a fortune by being there at the 0 moment of truth, right before you're about to make a decision. In fact, the majority of times when you go to Google, you're not buying anything, but those few times that you do, it makes all the difference. And the same thing is going to hold true in payments. Whoever can figure out how to sit in front of the $5 trillion in the US that's spent on plastic is going to own an absolute gold mine for this. So it's not about the payments. The payments are going to be a utility that sits behind this. It's owning that user experience and being able to effectuate and change that user experience right before that's where all the money and value is going to be created. So, we did a lot of research on this and looked at it. So I'll give you a few examples of what this could look like for the future and the potential implications for the industry. So think about it today. If you have your bank card and you pulled your bank card out, and all of a sudden, every time you pulled that bank card out, you could see right where you stood. You could see the balance. You could see your transactions. You could see where you stood on rewards. Would you ever want to give that up? The survey data would say no. And what we've noticed is that when you look at bank apps today, they're very transactional. In fact, 90 to 95% of the bank app usage is just simply what's on that screen right now. So what that means is you could wipe out bank app usage with just 2 APIs, the balance and the transactions. That's how fragile this is. If you want to see how this is going to play out in the world, take a good hard look at what's happening with PSD2 in Europe and watch what happens in the spring of 2018 and what's going on. The second here is also, imagine if you had your phone, think about how you could do offers on this side. We'll talk about this a little bit more later. But today, if you want to get an offer on a bank card or you want to get an offer in a store in the United States, you have to apply for yet another card. In countries around the world, you can get this in other places. Just imagine if you could get that on your card instantly at the point of sale. All of a sudden, you change the user experience. You can influence behavior for the retailers and for the consumer. And last but not least, if we want our phones to think for us. And if they can provide information about where we stand, where our balances are, and help us understand the trends, we want that too. Just switching gears here real quick. Mobile is finally going to take off. I know you've heard this year after year after year, but it is finally happening. And the survey data says it here, is that what we've learned, this year was the first year where more than 2/3, a majority say in the next, by 2020, they will use mobile payments and they will use the mobile wallet. But what's more interesting is when you get underneath that and you ask them, what's going to be the driving factor? The driving factor for using mobile payments is surprisingly not going to be payments. It's actually going to be able to get more of the information that you have in one place and being able to consolidate it. And when that happens, 2/3 of us say, we'll jump ship and we'll start using mobile payments at that point. But until we bring the cards to life, all we've done is put a piece of plastic on a phone. That's not enough to drive behavior. This will drive behavior. And this is probably one of the biggest trends we've seen out there, and one of the ones everyone's worried about is the rewards revolution and what's going to happen as we move forward here. And when you look at where we are, if you look back in 2007 and you roll the tape forward today, what's happened is spending on rewards cards has tripled in the United States in the last decade. What that means 100%, every penny of growth since 2007 on credit cards has been driven by rewards-related spending on those cards. And what's happened is, while the industry has seen incredibly low loss rates, incredibly low interest rates, they've plowed that money right back into more and more rewards for the consumer, to the point now where we're estimating that about $15 billion a year is transferred from, through interchange, through merchants, back to consumers in terms of rewards out there. The challenge is, for us and for the industry, is this is a high-stake game of cards. Because while the banking industry has been upping the ante for rewards over and over again, at the same time, there is a massive tug-of-war occurring behind the scenes that nobody's talking about. And that tug-of-war is that the rocket fuel that powers all of these rewards, interchange, is increasingly under pressure by creative merchants to drive down those rates, right? And you're also seeing banks are finally hitting terminal velocity where they're saying, look, I can just not afford this anymore. So something has to change. But the challenge for all of us, and this is out of our survey, is that when we ask consumers, do you like this? They love it. Almost half of us would switch a card if we could get more rewards. And 42% of us said we would just simply sign up for that upfront bonus. We've trained consumers to want more and more and more. So we're going to need to do something different to break this cycle. Right? We need a new playbook. We need to think beyond payments. And the good news is that consumers want this and merchants want this. We all want this. So it's about working together to make this happen. So look, we don't have enough time. We actually have dozens of different ideas that we went through and we surveyed. But I'll give you a couple simple examples of what we surveyed and what consumers wanted and what this could potentially look like. So starting with promotional financing, jumping back to what we talked about earlier. This is, again, something you can get in Brazil, India, Japan. You can get it online, you can get it at the point of sale, and you can get it for a general purpose card. But again, in the United States, you have to apply for another card, a private label card. So we went out there and we asked consumers, if you could get promotional financing on your existing general purpose card in store, would you want to take it? 75%, a full 3/4 of the consumers said they would much rather put promotional financing on their existing bank card than go get yet another card. In the US alone, this could be a $100 billion opportunity for volume. Think of it like a balance, for the bankers in the room, think of it like a balance transfer, except now you're getting paid for that balance transfer instead of paying for it. It's a tremendous opportunity, but this is only going to happen if you work together with the merchants. It's going to require collaboration. So another example of this is coupons. If you look at coupons, look, I think that card-linked offers were a great idea in theory, but I think we can all admit they've fallen woefully short on two fronts. One, the user experience, and secondly, the merchant economic equation has not worked out there. So instead, imagine in the coupon space, instead of being out there and tin cupping and asking merchants for more rewards, as a bank, you went out and you brought offers to them that were already paid for, right? And you change that whole equation around. And then instead of being redeemed after the fact, they were redeemed at the point of sale instantly before the transaction, again, at that zero moment of truth. This is a $200 billion industry that is still 99% paper. It is probably one of the biggest opportunities for banks and merchants to work together to change the nature of rewards in the future. Moving on here, collaboration is going to make a comeback. You saw that in the earlier video. The network effect that's going to occur as part of that collaboration is going to rewire the payments industry. And let's jump into this a little bit too. So before we go though, let's take a step back. Just understanding where the industry came from. When you look at this, the industry was first founded pretty simply. Merchants wanted to sell something, consumers didn't have money. They created a store card that allowed you to basically finance something. What happened was we eventually had 15, 20 store cards. We said we don't need them. So, okay, thus was born Diners and American Express. You had closed networks. Not to be outdone, banks saw a threat, kind of like Venmo, and they said, let's build our own capability, right? Well, they started the foundations of Visa, MasterCard. Then they got smart and they said, look, what this requires, it requires collaboration. We have to work together to scale. And now you have a $5 trillion industry sitting on the right-hand side of this page. The good news is that banks in the United States are relearning that lesson. After years of battling each other to build their own person-to-person payments ecosystems, they finally realized, and they've abandoned that, and they've come out with one common platform called Zelle, right? And that has the potential to fundamentally rewrite the payments industry. And based on our research, when we looked underneath this and we asked that Gen X, the Gen X, the millennials, the Gen Z folks, what was the most important thing they wanted in person-to-person payments? They wanted to be paid now. They wanted their money instantly. And that's exactly what Zelle does. If the banks in the United States can get the marketing and can get the user experience right on this, this could fundamentally rewire not just the P2P space, but it could rewire the entire payment space and how it looks like over the next decades. So the next trend we have here is around fintech. And what we've seen with fintech is we've seen a major shift in fintech investment. And that major shift is democratizing the technology that was up until now only available to a few banks out there. So let's take a look at this. One lesson we've learned, and I think all the venture capitalists probably in the room have learned on this one, is that finance is still finance. A loan is still a loan. If you give it out, you have to get it back, right? And a sexy user interface doesn't change the fact that a personal loan is a personal loan, that a card is a card. I don't know how many of you remember NextCard, probably not many of you, right? They were the hot thing in 1999. They were going to rewire the card industry during the halcyon days of the internet. Poof, out of business, right? And we're seeing the same thing flow over and over again today. If you give it out, you have to give it back. The good news is that fintechs out there have noticed this so has in the investment community, and they've put over $3 billion into what we would refer to as collaborative fintechs. These are technology companies designed to partner with finance companies. Great companies like Encino that's rewiring the commercial lending space out there, and terrific companies like Roostify and Blend Labs that are basically making Rocket Mortgage-like experiences available on a per-drink basis to community banks. They're truly democratizing the ability to get financial services. They're making digital available up and down the line, and they're taking the expense out of the system dramatically. So next thing here is an arms race in codes. This is kind of occurring behind the scenes, but it's critically important what's happening here, is that when you think about it, for the last 100 years, we've thought of our accounts, as numbers, whether they be bank account numbers or card numbers. But with the shift to EMV, our accounts subtly became code, right? It's code. Every time you put the EMV chip in there, that code runs every time, and it can produce a new number every single time. And what that's allowed is that's allowed banks to release that code out to anyone else. Mobile payments was the first example of that, but this is poised to rewire how we think about payments completely. And when you think about it, what will happen is, instead of us in the future pulling a card out, our code will simply be everywhere that we want it to be. And the next trend here we found is that payment, we're all going to become merchants. Every one of us will become merchants. And just again, rolling the backwards, back in 1999, a company in Silicon Valley wanted to figure out how they could use a Palm Pilot to beam money to their friends, beam them back and forth. The challenge was they could easily figure out how to actually send a payment. They couldn't figure out how, as a consumer, to accept a payment. The name of that company? PayPal. The magic behind PayPal is not actually paying. The magic behind PayPal is the ability for any one of us to accept a payment, right? And when you look at that forward now, we've certainly evolved a lot in the last 20 years from there, almost 20 years. You have person-to-person payments, we have personal terminals, and now we're working on, in other parts of the world, the ability to take a phone, a mobile phone, and simply turn it into an NFC terminal and tap it up against another phone. So now, the vision of PayPal that they had 20 years ago will finally come true. If you sit around this industry long enough, like many of us have, what you learn is there's no such thing as a bad idea in payments, there's just bad timing. Not to be outdone, the fraudsters are innovating too, and let's walk you through a little bit of what's going on here. I think all of us know, no matter what you do in fraud, when you push something down on one side, fraud simply comes up on the other side. It's a never-ending battle out there. And what we're seeing based on the research that we have is that if there's a growth market out there, it's a growth market in fraud right now. In fact, fraud is probably poised to grow globally at twice the rate of plastic spend over the next several years. So the question is what do we do about this? And what I wanted to show you is a couple of what I would consider one of the most scary examples of what's happening out there and what we're seeing. And it's this idea of creating synthetic identities. It's basically creating people that exist only in the matrix. And let's show you how this thing works. So it starts with a fake identity. Maybe a credit bureau gets hacked, not that that ever happens. They go out, they take like a thin file, they get a store card, they pay for that store card with cash in store. That then beautifully creates a really legitimate credit bureau, which the great thing then is that all the direct mail solicitations start coming from the banks that are out there. Those solicitations then turn into more accounts and more accounts to the point where now you can actually open a bank account and then go one step further than that. Then all of a sudden, the great news is the debt consolidation guys with the personal loans send you an offer, and you can take that personal offer and you can reload the whole system all again. And you do this over a period of several years. And if you think that's bad, one person can do this over and over and over and over again for multiple identities. The challenge with this is everyone asks us, how big is this problem? By definition, if we knew the size of the problem, we'd be able to stop it. Nobody knows how big this is out there. But what we do know is that when you have a network problem, you need a network solution to do it. And the red pill to find this matrix, to understand what it really looks like, is about finding connected data that's uncorrelated in a big data system and being able to recorrelate it and understand from all the various different aspects. Point solutions just don't work on this. Again, a much deeper topic for later. And last but not least here, it's time to rip the Band-Aid off. This is for all the folks in the United States. It's time to rip the Band-Aid off the US payment system and look at this differently. Our system is currently constructed, was built for when bandwidth was scarce, when processing time was in batch, excuse me, not real, and when networks were closed, not open. And unfortunately, while we've been sitting around, the rest of the world has been moving, and over 50 different countries have already deployed real-time payment systems across the world. And on top of that, they've actually finally agreed on a common language to do it, kind of like the mag stripe of everything else you want to talk about, and that's called ISO 222. And it's a great standard for doing all of the things that we talked about today beyond the payment, and it's a standard that's being rolled out there. If you want to see where this is occurring, just take a look north in Canada. Canada is already looking at rewiring their payment system. We need to get our act going. So look, that was a whirlwind tour. There's a lot in here. There's a lot behind more of this. I have just one last thing I'd like to share with you is that, and for many of you may not know this, but the great folks from First Annapolis have been a huge help with me pulling this together because they're now part of the Accenture team. So I'd like to welcome them to Accenture. And if you want to know anything more about what we talked about today, just give me a call. Thanks, everyone.